All right, guys, welcome to week 7 of the Process Profits Academy. And today in this session, we're going to get down and dirty on entries and exits. All right, because I feel like this is obviously one of the most important things that we can focus on as day traders is like what actually causes us to pull the trigger to get into a trade. Okay, this is something we need to become very clear on because it's one of the biggest issues that I've gone through, and one of the biggest issues that I see most other traders go through is if this area is gray, we tend to blow accounts, we tend to overtrade and get lost in the sauce. So it's really important. I like to do this at least weekly, right? I mean, that's really the main priority of these webinars, going through the week's price action, is to go, hey, I entered into the market here. Why? Okay, did it work? If not, maybe I should stop trading that way. Or if it did work, okay, maybe we'll continue to trade that way, right? It's just becoming super clear on what's working and what isn't. And in terms of execution, it's so important because execution is basically faith, right? So, like, trading is a very spiritual game. Okay, I don't care who you are. It's all about making decisions when you feel uncertain. So it requires a lot of faith. Okay, it requires a lot of confidence. And not necessarily that the trade's going to be correct, but more in the fact that even if I'm wrong, as long as I'm trading a certain way, I'll end up on top. Okay, that is the overall goal of trading, is to make sure that, okay, I could take losses, but I could also win. So in this video, once again, we're going to talk about entries, exits, moving averages, how they help me pull the trigger, and how they could help us with better execution. All right, so over here, chart on the left, you're going to see we have Monday's price action. All right, this is 2/9/2026. Now, once again, right, why did I get into this trade, right? Like, what is it? So we took the market long right here. What time is that? At 9:55 a.m., right? So I just want to talk about what exactly caused me to pull the trigger there, and if it's something that I would do again, right? So if I get my charts linked, which they're not, hold on one second. Here we go, 2/9. So once again, my process is always the same. And that's what keeps me grounded, right? Like, is okay, the market's giving me ridiculous amounts of information, right? It's going up, it's going down, it's going left, it's going right, it's going fast, it's volatile, it's slow. So this is when I defer back to the process and go, okay, what's the 1 hour time frame telling me? All right. So once again, I'm just gonna whip this out on the 1 hour. The chart on the right is gonna be the 1 hour. Chart on the left is gonna be the 5 minute. The 5 minutes very important because that's what tells us our story. Okay. So if I map out my pit numbers, right, and I just go here, I go add drawing. This is EOD, right? This is previous day high right here. And then we also have the ones below that didn't really matter. So these were the critical levels of interest this day. So every day I go like this and I go, all right, this becomes the sweet spot, right? So right here we go, sweet spot, all right? Sweet spot. Now, why is this the sweet spot though? It's the sweet spot because I'm going to filter out everything else and just focus on what happens here. My opportunity lies here. This is where the volume is. So this is where I'm going to look to make my move or understand the story better. Right? We're storytellers, right? Because we can't predict things. We can't anticipate what's going to happen perfectly. So we have to rely on our tools, our skill set. Right? So first things first, I go, all right, this is going to be the sweet spot. And then this is when I come up with the pre-market plan, the bullish and bearish scenario, right? So now as the market opens up, right, we get buyers shooting up above EOD. Now, I just want to be super clear here. When I see a large green candle like this, I know there's no opportunity, right? Like, yeah, I'm starting to understand buyers are showing strength, but I'm very clear here that I go into the day already going, hey, until my edge shows up, I'm not going to do anything. Those are my best days. My best days come from me staying patient and just waiting. Listen, when the story unravels and I understand it, I will then pull the trigger. Right? So I go, okay, let me get rid of these red lines. I don't like these. Okay. So this is end of day. This is previous day high. All right. So now I'm going to drop to the 2 minute because I want to be super crystal ball clear here that the 2 minute time frame will only work for you if you are watching the 5 as well. Okay? So it's very easy to completely blow your account, blow your day. It's so easy to fail if we take our eyes off this chart. Okay? If we lose sight of what's happening on the 5 minute, it is almost a guarantee for me that I will trade like absolute dog shit. Excuse my language. This is so important. The 5 minute time frame. It tells the story. Because it like we only have the odds in our favor when our strategy is present. That means after we get a moving average cross and an RBI or GBI or a healthy 1 hour trend. Okay? So like for me, the 5 minutes extremely important in terms of execution. So remember, I'm not doing anything right here. I'm sitting on my hands. I'm being patient. I'm dropping my daughter off at school at this time, but still, like I even like unless the strategy's present, and we'll get into other examples of when it does happen earlier, I'm not taking it. But I am gonna go, okay, buyers showed up at the open. Now we're gonna look for acceptance above end of day, right? Because this right here is EOD. So I want to see buyers hold it, right? Like I always think of it like a boxing match, right? Like you got buyers versus sellers, okay? I want to see buyers own this level. I want to see them show strength here. Now, how do we determine strength is the $1,000,000 question, right? Like, and this is where our moving averages start to come into play. We come into the 20 and we can't close. Like, so in like bring it back to execution. Josh, I'm struggling with execution. This is why. Because you're not relying on the moving average telling you the story or the strategy. Okay, so let me explain. If you are waiting for a candle to come into a moving average and then can't close below it, this right here, I'm going to make this bigger. This right here is a sign of acceptance or strength, right? There's a million words we could use, but acceptance is good, strength is good, right? In all we're doing is going the candle came into the 20 and couldn't close below it. If this candle closed below the 20, then we would have came to what conclusion? That sellers were a little bit stronger than we thought. Not necessarily that it's going to reverse, even though the probability of it reversing would go higher if we close below it. But since we didn't close below it, we could go, okay, what's the probability of it continuing? Pretty high, right? This is what we call acceptance. But we still don't have a crystal clear entry because there's no RBI or GBI here, okay? Now, it's very easy to fall away from the RBI and GBI when we're trading moving averages. This is something that I struggle with as well, right? Like, but I have to always bring it back to, hey, my best trades come from the system, the strategy, okay? So once we get something that comes into a moving average and can't close, this isn't necessarily an entry, but this is what we like to call opportunity, right? Opportunity is now starting to present itself, right? So when I see a candle come into the moving average and we can't close outside of it, I go, okay, opportunity is close. So now I understand the story. Now I need a way to pull the trigger. I need a way to get in. All right. And you know, if you start trading futures, if you trade larger size, or even if you're trading options, we still need a way to get in this volatility because this right here is a pretty large wick. And we don't necessarily know yet if buyers are going to hold it. So what I like to do, right, and Todd, big shout out to Todd. Todd has helped me with this, is go, okay, I want to see a candle wipe out the candle that respects the moving average. Okay? So if on the 5 minute you come into the moving average, you can't close below it, and then the next candle, you get a red bar, and then it gets ignored, this becomes an entry. Okay, so this right here was our entry long, right? Once we seen this, we were in the market long, and our stop loss went below it. So what I do is I take a screenshot of this. Okay, so I'll go like this. What? Okay, whoops. I will take a screenshot of this, copy, and then paste it into my OneNote, and I will go, okay, this was my entry, right? And I highly suggest you guys do this because to get confident as a trader, to be able to pull the trigger when you're supposed to, you got to become crystal clear on what your entry criteria actually looks like. Okay? And this is it to a T, to an absolute T. And you'll see on the 2 minute, what are we starting to get? Respecting the 20, and we're also getting a red bar ignored on the 2 minute off the 20, right? So this right here, once again, is the long entry. Okay, bam. This is blueprint setup on Monday. Now, I know it's early, right? Some of us don't like taking trades earlier in the morning, but this is the thing. The market doesn't care. The market just markets. So when the opportunity is present, we have to pull the trigger. We have to be able to see this, pull the trigger. We got a really nice move to the upside. And then I was also able to take advantage of this long play. And I want to explain why. Okay? So we got ourselves the first setup here where we played into previous day high. Okay? Price rips above previous day high. We get a pullback. And the pullback does what? It comes straight into the moving average. Okay? So remember what we just talked about over here. What was the principle we used to execute here? Okay? Can't close outside moving average, trade with moving average. Okay? That's the principle. If you can't close outside the moving average, trade with the moving average. This one simple principle has helped me stop chasing reversals. It's helped me so much with just staying focused on what the chart's actually telling me. So when I see this, I have to come to a conclusion, right? This, remember, we're on the 5 minute time frame, right? This is going to tell us the story. So I drop down to the 2 minute because I'm going, hey, yes, we are respecting the 5. We can't close outside the 5. Okay? And if I get an RBI or GBI here, that's what? An RBI and GBI right here is acceptance. Okay? Right? And then what's right here? Same thing. Acceptance. Right? Because it's always up to us to figure out who's stronger. It's not up to us to go, oh my God, we broke a trend line, it's going to rally, right? Yeah, we could use a trend line to determine acceptance, but overall, it's our job to only make a decision when the odds are in our favor. Therefore, I need to see an RBI or a GBI and a moving average, some sort of pattern off the moving average to confirm. Now, what I liked about this trade, and even though it felt extremely sketchy taking it because it was off the 5 EMA, what I loved about it was the igniting candle before it. This guy. Okay? So we couldn't quite grab the 20 here, but we got an RBI, and I'm just going to draw. You guys see the box? Okay, so ready? We got the box right here. That's the box. Then we got the box right here. So once this candle wiped the top, I said, hey, I'm going to enter long, and I'm just going to put my stop right here. But I would never come to this conclusion unless I understood the story on the 5 minute. So just to clarify here and do a quick recap, the 5 minute, right? Okay, so the 5 minute tells the story, and then the 2 minute gives us tighter risk. If we just trade the 2 minute, we might have tighter risk, but we will still blow accounts because we will have 1,000 paper cuts. Many of us have gone through this. Death by 1,000 paper cuts. And all that is you're not trading the 5 minute correctly. Whenever we lose sight of the 5 minute, we tend to get a million paper cuts on the 2 minute. Or maybe our stop loss is just too tight. So this is how I traded Monday. This is how I executed in the morning. I strictly used the 20 EMA in the 5 minute RBIs and GBIs. And the fact that they both happened at critical levels was even better, right? Right here we had end of day. And then right here we had PDH, right? So we had PDH. And another thing that gave me a lot of confidence on this trade was the 1 hour time frame. Okay, so we always talk about this, but the data has been crazy on this. Any trade you take with this is less than 10 points away from the 1 hour, it has a very high chance going in your favor. On SPY, that would be $1. So when I took this trade long right here, I was 70. Okay, so I was 7 points away from the 1 hour. 10 is the threshold. Okay? And same with this one. This one was 7. 7.5. 7.5 points. Okay? So all we're doing is spotting healthy trends on the 1 hour and trading with it. And when I see a healthy trend on the 1 hour, I go, how can I get in this damn thing? Right? Oh, 5-minute RBI. Okay, healthy trend. I'm good. And now, just to be clear here, guys, this does not feel comfortable, right? Because this is what the chart's going to look like. This is what the chart looks like when I'm pulling the trigger long, right? Like, and this is what I had to do. This is what I had to do to reprogram my mind because we're so used to thinking, oh my God, it's going to reverse. Oh my God, oh no, I'm buying the high. I'm going to get stopped. Like, I was so programmed to think that. But this is the thing. This chart is just getting started. Look at the chart on the right. It feels like, dude, this thing, I don't know. Maybe I'm buying the high. But on the 5-minute, it looks like this. It's still sketchy, right? It's like, dude, the open print's all the way down here. What if it reverses? This is the thing. I rely more on my moving averages to determine what's possible for price action, right? This is where that faith comes in. We have to be able to trust the moving average and our ability to identify the acceptance off it. Right? So when we're getting this crazy large 2-minute candle, and it's easy to go, oh my God, I got a late fill, then I'm just going to put my stop right here. Right? Or I'd like to put it maybe a little before the high of the previous candle. So I'll already accept the fact that I'm probably going to be wrong here. But I want to participate because I know the 5-minute is giving me healthy price action. And then that just kept going. Really good trade right there. And the 5 just kept holding. Look at the 5. 5 EMA holds right here. Pretty much holds here. This thing kept holding very well. And then the rest of the day was absolute chop. Tons of choppiness. Garbage price action. We did get another long right over here. And once again, the reason why I took this is because the 1 hour trend. Right? Whenever you're within 10 points or $1 on SPY away, an RBI or GBI or an RBI and GBI will probably hold here. So the 1 hour. So once again, this is the primary focus of today is execution. So let's just highlight the tools we use to execute here, right? So over here, I'm going to go execution tools. Okay. All right. So once again, we used critical level to identify the banks, right? So critical level. We used RBIs. We used 5-minute 20 EMA. And I'm going to put can't close below. Right? And then we also use the 2-minute 20 EMA. Same thing, can't close below. And we also use this, and I love this. Stop below previous or current candle. So in terms of execution, why do we fumble? Right? Really think about why we fumble. Why do we fumble execution so often? It's because we don't know where to put our stop. Or we'll go, oh man, this thing took off on me, right? Let's go back to this trade right here. We'll be like, this thing took off on me. And I can't put my stop here. So now I'm just going to sit here and twiddle my thumbs while this thing rallies 30 points. It's because we go, inherently, we're trying to do the right thing, right? Fundamentally, we're going, hey, we don't, listen, risk reward. I don't want to risk a lot. But what if you could go, hey, I'm going to get in here and just put my stop here below the current candle. I do this all the time. As a matter of fact, most of my trades on futures and options, I do this. And it's another thing, Todd, Todd will tell you. I mean, Todd trades large size NQ. He can't afford like putting it below 2, 3 candles. Like he's going, dude, I'm putting it right at this candle, and once I can, I'm putting it at break even. Right? What Todd told me the other day, he's like, defense wins most ball games. Right? Like defense. Right? And it's one of those things where it's like we psych ourselves out, so then we end up fumbling. We psych ourselves out so much that we end up fumbling the rest of the day. In reality, if we just took the damn risk when the odds were actually in our favor, we would be able to capitalize on it. So feel free to trade lower size when you do this. But these are the tools that I use to execute better. And this is a common theme. I like getting very clear on these so that I can do it. Because like we fall into this repeating pattern where we go, oh yeah, okay, I'm gonna try that tomorrow. And then what do? We don't try it tomorrow. Right? Or because maybe we're not clear on what to actually try, and then we fall back into old habits, and then old habits creep up on us, and then we trash everything. So these are my execution tools that I use constantly. All right, Tuesday, garbage, and now I talk about this a lot. Where out of 5 days, 2 are probably gonna suck. Okay, and for me, it was Tuesday and Friday. Even though we end up coming out on Friday morning, I didn't resonate with price action well. And we're going to get into that, right? So let's talk about Tuesday. And because I think we could all agree, it's easy to make money in this game. Where the struggle happens is losing money. These are the days that will cost you the most. A day like this. Now, that's not to say that some people could trade these pretty good, right? Like I'm not saying you have to suck on a Tuesday or like a price action like this, but the way I trade, I'm more of a continuation trend trader. Days like this usually don't really go that well for me. Took a long play right here. All my criteria was present. 1 hour was a little far away now that we talk about it. But it was still less than 10 points, so it wasn't terrible. Um, so I took a long play here. I got stomped out almost immediately. And then price ended up coming back down. I didn't really like anything I was seeing over here. I was able to execute off the 2 minute right here. Bam. Right? So on the 2 minute, my trades looked like this. Long play here, short play here. Both didn't have any follow through. Now, this is the thing though, right? Like out of 5 days, 2 aren't going to be the best. So if I'm like even like immediately when I went for a long play right here and didn't get the continuation I was looking for, a flat anytime I have a losing trade, a flag kind of goes up and I go, okay, did I follow my system correctly? If so, maybe price action just sucks today. And that's what we've seen. We were in between previous day high. We were in between the EOD. We finally got a breakout later in the day, and I was able to take advantage of this play. And I was able to take a short play down here. But the morning was trash. So we need ways to walk away. This is so damn important. Like a lot of traders are always like, man, when I'm full time, I'm gonna do great. And like when you stare in front of your computer all day, whether you could do it at work or whether you're sitting in your computer, your mother's basement, it doesn't really matter. If you are staring in front of the computer all day, days like this are going to wreck you. And they're gonna wreck your mentality. Right? Like this is why I'm obsessed with the gym, right? I need an outlet. I need to go do something else, right? Like otherwise, because we always want to be green, especially on like a day before. I did really good Monday, so I have to be careful because when I have really good days, I try to repeat and have another great day. I think it's just kind of human nature, right? Like you want to keep going. But if the market's not giving you clear price action and it's not having the follow through you're expecting, don't try to figure it out. Just get away from it. Get away from it. I know it's hard, especially trading prop firms and futures, because you could just keep going, keep going, keep going. And you're like, oh, if I could just get that one trade to get me right, I'll be good. Next thing you know, you're in deep shit. So the morning, not that good price action, right? Took 3 trades, long, short, took a long right here, got some money back. And what's really helped me though is the stop above the current candle, right? So even like on this short play right here that I hopped in short on this guy, hopped in short, price started to go down. I keep my stop right above the candle I get in. So I'm not getting hurt here, right? And that's really going to help you end up sustaining your equity curve. Now on this trade, I took a long play. Okay, so let me just zoom in a little bit because I want to explain something here. So on this, we get a moving average cross, we get a red bar ignored. That's a long play, right? Cool. 1 hour trend's healthy. We're in it long. I'm targeting PDH. I'm in a couple contracts, and I end up getting stopped out. It wasn't a loss. I probably made like $100, but I seen this guy. Okay, now these are those candles that Todd and me and a lot of other traders we're always talking about these guys. Okay, now I was able to really take advantage of this short play here, and it's because I lost this long play. Right? So the more we can understand in this game, when you're winning, someone's losing. When you're losing, someone's winning, right? Like the more we can adopt that mindset, we could go, okay, right here, we have a trend, right? Price is ripping up. We keep respecting this trend, respecting this trend. I'm in long. So once again, what's my execution? Can't close outside the 20. We got an RBI. All right. So I'm following the process. I'm not switching anything up. I'm trading the process. I'm looking for a move up. We don't get it. And then we get this guy. Bam. So how this looks for me is I go long here, right? Let me just be crystal clear here. I go long here. Then I'll add here. Okay? And then I get stomped out here. Right? And then when I'm getting stomped out here, right? So right here I'm going to go stomped out, right? We're stomped out. I'm not the only individual stomping out. There's a lot of buyers that are also stomping out. The market's going to start to shift. We couldn't make a new high either. We got a high up here. Now our high is here. So I'm going, hey, how do I know the market's shifting? We just closed below the 20, right? How do I know the market's shifting over here? Because we literally just broke the 5. We got a flat 20, right? So the market's starting to shift. We're able to take advantage of this. Okay? Now, because of that, I was able to get in this trade a little early. Right? I was like, hey, I just got stopped out. We can't make a new high. I'm going to hop in. I'm going to put my stop above the current candle. And I was able to capture this large move. And then we got another GBI right here. Didn't have much follow through. But what I'm getting at, though, guys, is I'm only executing off the 2 when the 5 makes sense. This has to make sense, right? If I could spell, that'd be cool. And when this makes sense, the game gets a lot easier. So I go, like when we broke this trend, and this green candle came up to end of day, I added in on this end of day retest right here because end of day was right here. So if I come here and I go here, I'm just going to take this guy. I'm going to go here. This was end of day. And this is like, we can't sleep on critical levels, right? This was end of day, right? I'm going to make this blue. So on the 2-minute, we're selling off. I'm already in short. This candle comes up to EOD. Yeah, I could wait for a GBI here, but then I'm getting in so far away. So instead, when price comes up to EOD and we can't close above it, I'll add in and I'll pull my stop right here. Stop above the current candle. So you see how the current candle philosophy kind of gets rid of a lot of that fear. And I highly suggest you paper trade a lot of this before you just start doing it. Like trading this is definitely sketchy. But if you understand the 5-minute trend is healthy, And this candle's just wicking into the trend. Look at this. Wick, wick, right? So like we just wicking into it. We closed pretty bearish. So I'm like, all right, I'm going to hop in short. And my stop loss is going to go right above the wick. All right, guys, check your mute. If you, let me see. Okay. There we go. All right. I think we're good. I think we're good. Thank you. Thank you. All right. Yeah. So in reality, like this is how I'll use moving averages to execute, right? I'll be like, okay, we fell below EOD. We closed below EOD. This is bearish, closing below it. So now, and like when I'm looking at this, I'm like, okay, we broke trend. The trend's healthy. We have a healthy 5-minute trend. I'll be like, we're probably going to come down to the low down here, but I don't necessarily want to wait for another GBI. So I'll be like, okay, we just came into EOD, kind of close below it. I'll hop in here and put my stop above it. So that's kind of how I do it. Even if you waited for the GBI on this, you still would have been successful. If this was your entry right here, you still would have been successful. But you would have had to do what? Right? Let's talk about it. If I entered in short right there, if I said, "Hey, green bar ignored, I'm going to get in short," I'm going to at least put my stop above the current candle. And maybe that takes a little lower size. And then when price comes into the 5 and can't close above it, maybe I add in right here. And then I drop my stop here. That's literally how I do it. Right? So like I don't necessarily go into every trade going, hey, my stop has to go above the GBI. I'll go, hey, I'm going to get in, put my stop above the current candle, and wait for the market to illuminate the path for me. Right? The market's going to illuminate the path as you walk it. So, like, as price action's unfolding, and then you get a green candle that comes into a moving average and ready, can't close above it, trade with it. This is the philosophy for me that literally does like this, because execution means you're pulling the trigger when you're uncomfortable. That is the definition. Dude, guys, I've been collecting data on stuff for like 20 months. I still struggle with confidence. Like to become what is like there's really no way to be quote confident in your trade. There's all what you could do is be confident in risk reward. That's it. Right? Like there's no way to look at the market and go, "Oh, yeah, this thing's definitely going my way." Like if you're thinking like that, you're done. You're going to get smoked sooner or later. Like it's all about, "Hey, the odds are in my favor. How much am I willing to bet that they continue?" And then how can I manage that risk appropriately? Right? And that's what like then we use our tools. Oh, we can't close outside the 5. Okay, I'm going to drop my stop. I'm going to put my stop right above here now. All right. Oh, we closed back below the moving average here. Okay, drop the stop here. Drop the stop here. Pull it down. Boop. Okay, it clipped me here. Right? And then we go, all right. Okay, how do I get back in? Well, I'm going to watch price as it comes up and starts retesting the area of value. And if we're far away on the 20, if we're far away from the 20 on the 2-minute, I will not hesitate to drop down to the 1-minute. Hold on. Let me show you here. This is 210. Yeah, right here. This is entry for me all day. Inside of AOV, can't close. And maybe I'm guys, I'm probably not going to take the first one, but if I do, I'm going to put my stop above it. Right? And we're going to trade this down. Once again, the 1-minute is dicey if you lose sight of what's happening on the 5. Right? Don't go, oh, Josh trades the 1-minute, so if I get an RBI tomorrow on the 1-minute, I'm taking it. Don't do that. Don't do that. That's not going to help you. But if you're going, hey, I understand the story on the 5 minute. We just broke this trend line. We're retesting EOD. You know what? I'm gonna hop in because I understand the context, the story. I'm gonna trade with it. And yeah, this was a great one. And like Todd always says, right? Like when you're trading off a 1 minute 20, wait for another GBI. Right? Green bar ignored right here. That's a short play. Stop above the green candle. Now you're risking 1 bar. Area of value, 20 EMA. Whether that's on the 2 minute or the 5 minute. Or the 1 minute. Alright, next day here. This day was this was a pretty tough day right here, but I ended up scalping this, and I want to show you guys how. Right? Because we're not always gonna get perfection. Okay, we're not. So this was a really good trade. So let's just talk about it. This was end of day right here. We had previous day high right here, and then we had previous day low down here. So let me just change this. This is PDL. So market opens up. We gapped up like crazy. There was something going on in news. This was previous open print, so this is also important. Okay, so right here is this is all right. It's previous open print. So initially, price is ripping up and it's battling previous day high, right? So there's a battle here. So, buyers are trying, sellers prevail. Then we get a GBI here, but there's no moving average cross. I don't take this entry short. And I'm like, oh, wow. But I missed it, right? Damn it. Or we could go, hey, what's this information telling me? Well, for one, we just closed below the 5-min 20. Okay? So what does this mean? Look at this candle. Did this candle close below it? No. Did this candle? No. Did this candle? No. This one did. So there's a pattern disruption here. Okay? Buyer, something just shifted. We know this because the way price just closed below the 20. So when I see this, I'm like, oh, wow, that's definitely not bullish. So now my pre-market plan comes into attack and I go, hey, is this a bullish scenario or bearish scenario? Oh, this is probably bearish. And if we break this, I mean, we already rejected PDH. If we break pre-OP, we're going straight down to EOD and maybe even previous day low. So that's how I'm always doing it. I go, hey, here's the sweet spot. Whoever controls this, right? If buyers control this, we're going here. If sellers control it, we're going down. So it starts to sell off like crazy. This thing's ripping. Now we could go, hey, I need a GBI to get in, right? Well, that might happen. It might not. And if you're a futures trader, we have this ability to get in very low risk and to keep trying, right? We got all the buying power in the world. If you're an options trader, you can still do this. You just can't do it as much. All right, but you are not limited. You can still trade this way, and I would advise that you do. Right? So green bar ignored. We now know the $1,000,000 question, which is sellers are owning the 5-minute. So this is a bearish story. This is bearish. So once again, I want to take advantage. I need to use my tools. What are my tools? The moving average, right? We're going to go moving average. We're going to go critical level. We're going to go RBI, GBI. These are the key tools for me. But these tools only work when I understand the story, which is required on the 5-minute. So price comes up. Here's the GBI right here. We start to come off like crazy. Very aggressive trend that respected the 1-minute 5 the whole entire time. So when I got into this trade, which was on this candle right here, because it was a GBI, because I needed somewhere to find my risk, right? I just needed somewhere to go, hey, I can get in. Let's hop in, and I got somewhere to put my stop now, right? I can get in here, and I can put my stop here. So once again, this is what it looked like. This was my entry short. selling off like, and it's because I missed this. I didn't see this. I was probably watching the 2 minute or something. But we start selling off like crazy. And price is selling off. And then on the 5, I watched the 5 minute candle wick into the 9 and then close. Like when I see this right here, guys, this wick, and then it closes bearish. I really, that's what I want to see. And that was this right here on the 1 minute. So a 1 minute GBI is a 5 minute wick. You guys understand that? A healthy 5 minute trend. What do healthy trends do? We covered this in month 1, right? Healthy trends continue, right? Healthy trends continue, meaning no gaps, no extensions, but don't mistake pullback for a gap, right? Like this is a healthy trend. We got the 1 hour time frame down here. We're selling off into it. A healthy trend still has a pullback, which provides us the opportunity to get in. Right? So this was a tough one though. It wasn't easy. But even if you missed that one, you could go, hey, how about this one? Green candle wicks into the 5 and gets ignored here. So that's a good short entry. Stop above it. Once again, guys, I'm not advising you to trade the 1 minute if you're uncomfortable with it, or if you need to understand the story. Okay, everything's about the story. Because we're not always going to get. Because you know what the issue for me was when I only traded the 5, and it's not, and that's and not. It's like when I miss opportunity, sometimes I get frustrated. When I get frustrated, sometimes I start chasing things. Sometimes I start FOMOing things. Sometimes I start adding into things I shouldn't. And that's where like bad habits come from. Is from missing opportunities. So for me, it just helped me a little more to learn to scalp on lower time frames. So it wasn't so dire, right? I didn't need perfection. I just need to understand the story. Then I took a long play. We got very extended from the 1 hour. And I ended up taking a long play into the 1 hour trend. But overall, this day wasn't the best price action either. So if I didn't have that trade in the morning, I wouldn't even have probably done that good. But that was a
Hey,
great.
Josh, quick question.
Yeah, let me
Do
hear it.
do you feel like, well, once you're trading and executing on the 1 minute, do you feel like it just takes way more mental capital from you, or did you already do it enough to where you're just automatic
So that's a really good question.
now?
So when it comes to the 1 minute, what like and it really comes from me adopting this philosophy that I only want to trade when the odds are in my favor. That's why you guys keep hearing me say that. Right? Like I only want like I and now to be clear, there's multiple things that mean the odds are in your favor. Right? There's the HPT cross on the 5 minute. Right? When we see that, we know the odds are in our favor. There's a healthy 5 minute trend. Right? When we see that, the odds are in our favor. Right? Like at the end of the day, and maybe it's with more experience, right? I've spent a long time, trading on demand, executing these sort of things. So it probably comes with a lot of repetition as well. But what I've learned to do is spot a healthy trend like this, and I've already come to the conclusion that it's bearish. Right? So I've already come to the conclusion that hey, sellers defended PDH, it defended pre-OP, and we got a GBI here. Now, I've logged enough trades to know if sellers hold all this, there's an 88% chance we're coming down here and then we're coming down here. I just need to find a way to get there. Right? I just need to find a way to manage my risk appropriately. So I know a healthy 5 minute trend is probably going to continue, but it's probably not going to give me an RBI. So that's when I go, hey, especially with futures, I'll execute on a pullback. And then I'll go, what's a pullback actually look like? So on the 5 minute, this candle is going to wick into this moving average and then start to come down. And then what that looks like on the 1 minute is this. So going back to the mental capital, because if I just hyper focus on the 1 minute all day, I will literally give myself a crazy migraine. right? So like once again, I don't want us going, hey, I'm gonna go trade the 1 minute tomorrow. And if I don't recommend anyone doing this until they've practiced it. But the reason why I've been talking about this so much in terms of execution is because it's all centered around we only are making decisions when the odds are in our favor. And when we have healthy trends, the odds are in our favor. When we understand the story on the 5 minute, the odds are in our favor. But we tend to miss out on so much because we're not getting 5 minute RBIs and GBIs currently as much as, lately. So going back to the mental capital, it's in reality, when I see this pattern here, I just want to find a way to participate. So I'll whip out the 1 minute or I'll whip out the 2 minute and figure out which moving average is being respected, and then I'll just get in accordingly. Right? So on the 2 minute, look how we couldn't close below the 5. Right? So on this one, we wick into it, can't close below it. So if I enter here, I'm just gonna put my stop right here. And then I'm playing the 5. Kind of like how in yesterday's live, when I was like, hey, profit taking should be done off the 5 EMA. Right? That was with profit taking. We do the same thing for entry, right? Because if price keeps respecting the 5, that's a pattern. That means odds are in our favor if we can see that. So watching that, I'll come to a conclusion and go, hey, I already know it's bearish here because buyers just got smoked. We got this very large move up. The law of polarity tells me what goes up comes down the same way. I need a vehicle to get there, right? So that's when I'll drop down to a lower time frame and figure out which moving average is being respected and trade off it. It's either going to be the 5 or the 20.
So what you did if you was trading options?
The same exact thing. If I was trading options, which I did on the next day, we'll get into. If I was trading options, I'd be like, okay, if I'm watching this here and I get a green candle ignored, I'm going to go, hey, is this bullish or bearish? I'm like, this is bearish. Right? And then the next is so once again, the 5 minute story is telling me buyers aren't holding this PDH in these two levels, right? Buyers aren't holding this and they ain't holding this. So now the bearish scenario kicks into my mind and I go, we're going to probably get a move down. And I go, okay, I could either wait for a pullback into the AOV, which is what I usually do, but we started to get very aggressive selling. I was able to see that because on the 2 minute, we kept defending the 5, right? We came into the 5, defended it. So if I'm trading options, I'm going to come to the same conclusion. I'm going to put my stop above the current 2 minute candle. Boom. Right? Because we're playing the moving average that's being respected. It's just that it's a scalping strategy, right? It's not like I'm not replacing. See, the strategy's purpose is to tell you who's got the ball. If I already know who's got the ball, I'm gonna play off a different moving average. And then, that way you don't miss the whole move on the way down. Once again, this is something that you should definitely practice. This isn't something that you just throw in your arsenal and don't go executing off the 5 minute EMA tomorrow. Unless this makes sense, right? It's just another way to take advantage of price action. Because the alternative is you sit it out and you wait. But what I kept noticing is when I miss large moves, I get frustrated. And not necessarily frustrated, but no one wants to stare at this chart while the whole thing's selling off all day, make no money on it, and then go for a short play here off the 5 minute 20 and lose $300 and shut your computer because now you're frustrated, right? So like, I would rather get into the market when I know, hey, what's the story? The story is sellers got the ball here. How can I participate with low risk? Boom. All right. When Thursday? Is this Thursday? Thursday was a really, really good day. Yeah, Thursday. Let's talk about Thursday. I traded futures and options on this day, and once again, I was able to do that because of just identifying a healthy trend, right? So let's run it back here. So we got previous day high right here. We got previous open print up there. We got end of day right there, right here. And then we got previous day low right here. And then we got some targets to the downside. So once again, every day I'm going to go into this and I'm going to go, okay, we have a bullish and bearish opportunity ahead of us, right? Buyers are either going to control EOD and then we go up, or sellers are going to control it and we go down. That's what the data tells us. So, and that's the foundation of everything for me, right? Like for me to confidently trade off the 2-minute 5, it's because I understand if sellers hold a critical level, it's probably going to go to the next. So I just need to find a way to take advantage of it. So I'll be like, okay, market opens up. Let's go candle by candle here. Market opens up. Where do I got? Okay, here we go. Still nothing for me. Right? I'm going green bar. Let's see what happens next. Wait, wrong one. Could have swore. Oh, here it is. Boom. Now this one was very tricky because we actually got a red bar ignored. But if I can remember, let me see what the 1 hour was telling me. What day is this? This is 2/12. 2/12. This day. So I did not take that long. And it was probably because I was just driving my daughter, dropping her off at work. Right? That might be a good long play. Right? The 20 was pretty flat. But if that was a long play for you, that would be a simple stop out. Right? It didn't hold the red bar ignored. So, and now once again, what does that mean? If an RBI, right, the same thing with a moving average. If it can't hold, right, if it can't hold, it's because it's weak, right? So if we get an RBI that doesn't hold, there's two scenarios. It could be weak or it could be chop. Either or, I'm not trading, right? So like when I see a red bar ignored, I'm expecting it to continue. If it doesn't continue, it's going to fall in one of these categories, weak or chop. So right here, I'm going, okay, buyers are weak. And then I'm starting to play some stories in my head on the 1 hour, right? And we're at some key levels here too, right? Where is it? I thought, yeah, there were some important levels here from previous days, right? We had end of day right here. We were at a couple key levels. Boom, we get a green bar ignored. Okay, so once again, when I see this, now the odds are in my favor. But I just want to point out here, what this candle do? This candle closed below the 20 EMA, right? So this isn't, I'm going to get in. This is helping me understand the story that sellers are starting to be a little stronger than buyers. So I'm going, okay, is this bullish or bearish scenario? This is bearish scenario. And once again, bearish scenario means if we break EOD, we're going to PDL. If we break PDL, we're going to this guy. That's the foundation of everything. Like a lot of people ask me how I hold my trades, like I can hold really long. It's because I understand the highest probability scenario is that this thing goes to the next critical level. That's the highest probability. There's an 88% chance if this level breaks, it's going to this level. I just need to find a way to participate with low risk. So we get a GBI, right? I'm dropping my daughter off at school. That's not a horrible entry, right? If you take this short, once again, your stop should go up here. If your stop can't go up here, don't take it short. If that's too large, drop down to a lower time frame, right? And then we go, okay. Do we get a 2-minute 20 retest here? Nope. So let's stay patient. Now this candle comes into the 2-minute 20 and closes above it. So once again, there's really still nothing here for me until this candle. This candle tells me a lot, right? It tells me that buyers tried very hard, but they couldn't hold it, right? And on options, this is a short play I will take all day in America, and I'll make sure my stop's above it. And then I'll just ride it out, right? Because, and then you just got to trust in the AOV. Some hold, some don't. right? Healthy trend. So on futures, I can't afford that. So I'm gonna go, okay, let me find something good off the 2. Oh, that one's good. But I want something a little better. Bam. We get this green candle right here, comes into it. And while I'm watching this, I'm like, these all look good. Now, to be super clear here, I entered on the 5-minute on this trade. I wasn't even watching the 2. I just got back to my desk from dropping off my daughter. She was late. I seen the market on the 5-minute. I seen this candle come into the 20, and it couldn't close, right? So, could not close outside moving average. It's the most important thing because when it's wicking into it, can't close, it's telling us sellers are a little bit stronger. So we finally get the GBI right here. I enter in short. My stop's above the GBI. And in 10 minutes, we clear over 100% on this trade. Trading options. 10 minutes, boom. And then once again, what do we notice here on the 5? So, and maybe this is something that you guys just start to chew on and don't and start doing. Maybe like practice before you do this. But I have been studying these trends for so long, it's getting easier for me to see a trend like this that's super healthy and go, hey, if we wick, like if I get a GBI right here and it looks like this, I'm gonna get in right here, and my stop's just gonna go here. And I'm gonna and what we're doing is we're playing the 5 EMA. This is a scalp play, right? But it doesn't necessarily need to be a scalp play. And when I say scalp, all I mean is the risk is going above the current candle, right? It doesn't like I don't like that word scalp. It makes people think like it's got to be quick because I held this trade for like an hour, right? So like scalping, when I say scalping, it's more of just like an entry philosophy where I'm like, oh, I'm only gonna risk X on this, right? And that's really how I only like to risk one candle ever, anyways, right? That guy, great move. I mean, we just kept playing the 5-minute trend down, kept playing it down, until we closed above it right here. So you like notice this. And this is so important for holding trades, getting into trades, for exiting trades. I broke this rule Friday and it cost me money, right? What was that rule? When price is respecting a moving average, it's telling you something. When it no longer respects the moving average, it's telling you something, right? Like execution, pulling the trigger, we're not going to have all this information. This is all we're going to have right here. And we need to be able to trust ourselves and go, hey, we just closed above the moving average we just played off of. I'm going to get out. Right? Like that's what they're there for. Great trade. I took a short play right here too. Once again, is literally completely off the 20. Completely off the 20. The 1 hour trend, yes, it was pretty far away. But once again, if price can't close outside the 5, I'm just gonna or the 20, I'm just gonna trade with it. I'm gonna put my stop above it. Right? So we got a good trade there, and then I'll ride the 5 EMA down until we close above it. Right? So that would be the exit. And all we're doing is using moving averages to determine how far this trend's gonna go. And we're using them to get into trade. Like I use this concept here forever with getting out of trades. Now I'm just using it to get into them as well. Right? Like if you got a healthy trend and it just respect the 20 and you just got a GBI, instead of missing the whole move, go, hey, am I willing to get in and risk, I don't know, 100, 200 bucks, see if this thing continues? Sometimes with options, am I going to risk, can I risk 20 bucks, see if this thing continues? Why not? What's the alternative? Waiting and getting frustrated, playing a stupid trade later? Oh my God, then we got this move. This day was insane. This was wild. And now notice how I'm using the trend line here. Trend lines are super important But one thing you'll notice is I'm not drawing bullish trend lines, right? I'm not doing any of these. I am not doing any of these. Do we know? And the reason why is because the dominant trend, the 1 hour trend, is bearish. This is bearish. It is my job to always trade with this, unless I'm trading into it from afar. And even then, that's sketchy. I never trade, I very rarely will trade a reversal unless I'm feeling extra stupid that day. Sometimes I do it, right? But for the most part, I'm always trading with the 1 hour trend. So I am not going, oh, look at this breakout. Let's go long. That's not what no. I'm going, hey, where are buyers going to try and where are they going to lose it? I draw the bearish ones on a bearish day. If it's a bullish day, I draw a bullish one. Break, GBI, boom, continuation. Great, really good play right there on the 2 minute, or on the 1 minute, or on the 5 minute. I'm sorry, 5 minute. And once again, what happened on the 2? Couldn't close above the 5. So, like, moral of the story with this whole session is execution is about making decisions using when you're uncertain, right? It's about pulling the trigger when you are uncomfortable. Very rarely do I feel super comfortable getting into a trade. You're really not supposed to. Our confidence doesn't lie in the fact that we're going to be right 80% of the time. No, our confidence lies in the fact that when we're wrong, we're only losing 1 bar. And when we're right, we make really good money holding the 5 EMA. This gets easier. This gets easier. The more you do it, the better. If you're struggling with holding, I'm going to promise you, if you put in 100 hours on demand, you will no longer struggle with holding or replay. I promise you that. I've been practicing on demand for like a year now. I know it sucks. I know the application sucks. I know it glitches. I know you got to restart the friggin' thing 100 times. But unfortunately, that's the only tool we kind of got, unless you got like replay on TradingView or something. And it's just one of those things. Like the one that does it's gonna get better. So it's one of those things, right? Because if you trade replay and you watch it just continuously happen, you're gonna get more familiar with it. You're gonna get more. It's gonna become just easier to you, right? And more experience. You see things more. You get way more confident. Like there's no saying out there that's gonna make like there's nothing that's gonna make you just hold longer other than experience. Like there's no principle. Like I mean, we could literally look at this and go, dude, until a moving average breaks, this thing's gonna continue. But 9 out of 10 times, we still cut the trade super damn early because the profit's telling us to. Right? Like, so the only way to get better at it is just putting in massive reps on replay. And then sometimes it screws with you. Like this day, I did very well, crushed it, held this whole thing. What happened to me Friday? I kept trying to hold every trade. I kept trying to press them. Right? I caught multiple longs. Like we went long. Where was it? I think it was on NQ, but we took a long play like here. Massive move up. I didn't take any profits because I wanted it to go further. Ended up getting stomped out. Did the same thing here. Held it. I kept pressing it. So like, it's one of those things, right? Where there's no perfect way to take every trade. I just didn't follow my rule here. And my rule was, I literally said it too. I was like, play the 2 minute 5. When it breaks, get out of the trade. Right? So we went long on this one, on both these, right? We went long here. What were we holding? The 2 minute 9. Boom, broke it, sink. Right? And there's the same thing with this trade. Took the market long here, right off the 20. I was up $800 on this trade. And then I tried to add in. She continued, broke, boom. But all in all, I wasn't like really too crazy. I wasn't too upset about it. We ended up getting it once I hopped off. We ended up getting another red bar ignored here off the 20. I didn't even catch that move. I went to the gym. But let's talk about this one. can't close below the 5. Every time we come into it, it's going to feel uncomfortable. But you got to be able to look at this and spot the pattern. You got to be like, dude, we can't close below that 5. So if I get in, I'm going to play according to the 5. I caught this move. Just a GBI short play here. This was a really good move done open print. And that's the beauty of trading. You can have a garbage day all morning, right? I think I was down like $800 here, and I was able to make all my money back, and then end the day up like $250 just off this trade. So and that just brings me to the conclusion that it's not our job to be right every single day. It's our job to execute when the odds are in our favor, and when we're wrong, we get out, and when we're right, we let her breathe a little bit. Play the 5. That's key for me. That's the keyest thing. It's helped me so much with holding trades. And it helps me make the hard decisions, right? Like if I'm in a trade and it closes below moving average, I know to get my ass out of the trade, right? So it's just all about like relying on our skill set instead of our emotion. So that's the key. That's the key for this week, guys. Execution tools, right? Go over your trades. Ask yourself, right? Oh, maybe I took this long and I got out early. What moving average could I have used to help me stay in that trade? Right? Because if we learn to bring more money in, that's going to be a massive benefit, right? Like, what moving average can I use? Would the 5 have worked here? Right? If you guys have any questions, just send me your trades. I'll show you if they would have worked or not. And then regarding the 1 and 2 minute, this is the most important part. If you are going to use the 1 or 2 minute time frame, only do it when the 5 makes sense, right? So that was another issue I made on Friday, right? I guess you could call it an issue. I was trying to play off this larger GBI right here to the downside, and I kind of got hyper focused on it. And once again, I didn't understand the 5 that well, which led me to, taking trades maybe I shouldn't have. Once I understood the 5, right, that we were getting RBIs, then I was dropping down to the 2, and I was trading with it. So that's the biggest takeaway. If you're going to, and you don't always need to use the 2. There were multiple trades this week that I just took off the 5. So it's really about, it's about you and where you're at, right? Like if you want to stick to the 5 and just trade the 5, do it. But if you feel like maybe you're plateauing or you're struggling to actually hit that next level, the 2 might be the tool you need. So with that, I'm going to wrap up, guys. I'm going to post this so everybody's got it. I hope everybody has a great Valentine's Day. Make sure you do something nice for somebody that you love. Because at the end of the day, that's what it's all about, guys. It's all about building family, and they're the ones that push us to be that much better. So give them some flowers, all right? All right, guys. I love you. If you need anything from me, just message me, okay? Peace.